Technology is moving so quickly these days, and in fintech and business lending, it's especially important for automation and data. It's like the goal these days. And my guest today is with a company, Ocrolus, that is at the forefront of fintech and business lending and all these things that we're going to talk about today. And he is David Snitkof, General Manager of Ocrolus in the SMB space, correct?
That is right.
All right. Well, welcome. Appreciate you joining me.
Good to be here, Shane.
Let's talk about kind of a quick synopsis of what's going on with Ocrolus right now, which you guys are really, because you're in some different markets, but we'll focus kind of on the commercial business lending side. Talk to me a little bit about that.
Yeah, so if people don't know, Ocrolus is an AI workflow and analytics platform for lenders. So we work with small business lenders, mortgage lenders, and also have some other businesses in consumer, auto, tax prep, property management, and a couple other verticals, but our primary markets are small business and mortgage lending, and I spend 99% of my time on working with small business lenders. We have about 200 small business lenders that use Ocrolus to make high quality credit decisions with trusted data and unparalleled efficiency. And the best part of my job is just getting to work with clients in this market who are really pushing at the forefront of small business lending and getting capital to the business owners who need it. We see about 500,000 business applications for credit every month. We get a pretty extensive cash flow history for all of those merchants, and we help lenders figure out a really nuanced picture of the cash flow and the financial health and the operating dynamics and the debt capacity of every business applying for credit that they can then use to make a stronger credit and fraud decision.
Great. And you guys have come a long way since, I kind of first heard about you, me personally, probably 7, 8, 9 years ago, something like that. And you're really doing great things, and it's helping, I think, a lot of businesses. They may not necessarily know about you, but upstream, essentially everyone does. You guys just came out with a new product for SMB lending. It's called Encore. Tell us what it is, and in kind of, layman's terms, how it's going to help business loan brokers and everyone else.
We are very excited to announce Encore. Encore is a product that allows Ocrolus clients to share verified borrower cash flow profiles with trusted counterparties in a secure double opt-in platform. So what that means, let's just say a merchant applies to a broker and they upload their bank statements or connect their digital bank data. Ocrolus will process that data, generate cash flow analytics, send that back to the broker, and the broker might figure out, okay, which lenders should I now share this application with? In the old world, though, we would see brokers send this application to lenders, often through email, which can be a fundamentally unsecure medium. And we see, unfortunately, there's backdooring that happens in the industry. You don't know who's sharing the data over email. But then that downstream funder needs to re-upload the documents to Ocrolus to analyze them and then make a decision. So we had a lot of uploading of the same documents from many different sources. And what Encore does is the sender can say, all right, we've received this verified borrower cash flow profile. Let's just permission it to the trusted counterparties on our network. So a broker can say, here's this lead. Based on the analytics from Ocrolus, I think this qualifies for lender A's credit box. Let me just permission it, either with an API call or a button in our dashboard to lender A. Lender A will get an alert immediately. All the data will be pre-processed in the format that the receiving lender uses for their credit decision. And because it's in that format already, the lender can move very swiftly to evaluation, offer, and funding without waiting. So brokers end up converting more leads, funders end up funding in minutes, and then borrowers get the capital that they need to thrive.
I think in your article or press release, it was like a duplicate efforts to be made from the broker's side, right, in reviewing the bank statements and that sort of thing, and then the funder was going to do it anyway. So they're duplicating efforts, and that's time consuming, right? Yeah. And so now you're reducing time.
I'll give you an example of some of the craziest inefficiencies that exist in the market. So there are certain cases in which a broker or a marketplace will receive digital data, so someone connects digitally. They would take that digital data, convert it to a PDF, email it to a funder, then that funder would upload the PDF to us for processing to convert it to digital data. They could have just left it in digital data to begin with. We could generate our standardized, consistent analytics and then instantly permission it to whatever trusted counterparties in the ecosystem need to work with that data. And so there's great value in having a standardized view of cash flow across the ecosystem, whether you're a broker or a funder or a capital provider. And that should just help the pipes run much more smoothly for the whole industry.
And does it extract or bring out the debt positions in the data, right?
That's right. So when we analyze either bank statements or digital cash flow data, like let's say from Plaid or Finicity or Decision Logic, we first tag every transaction. And so a transaction might be revenue, expense, proceeds from a lender, payments to a lender, non-sufficient funds transactions, tax payments, tax refunds, all the other types of things that can happen in a business bank account. And we have tuned our transaction classification algorithms to specifically look for what a business lender would want to know about a business's cash flow. It's not about, did you eat at a Chinese restaurant or an Indian restaurant or a burger joint? It's about, does this transaction represent, true revenue, a deposit, a transfer, things like that. Then we take that tag data and we transform it into cash flow credit attributes, which looks structurally very similar to the attributes that a lender would receive from a credit bureau. But now, instead of being based on bureau trade lines and inquiries and utilization and debt and payments and things like that, they are now based on bank transactions and revenue and expenses and debt capacity. We also entity resolve the counterparties in each of transactions, which means that we can understand who are the counterparties on debt. So for any business we see, we can say, all right, they have existing positions with these two lenders. And now that we can measure the true revenue, we know their expenses, we know their cash flows, and we know their debt obligations, that's incredibly useful for a new lender seeing if they have the capacity to service new debt.
This be implemented then for a broker. Is this catered specifically that the broker is going to be using it on their end, or is a funder, for if we're talking about revenue-based financing, maybe other actual lenders, term loans, or lines of credit? How does that work then? Is it broker that's going to have that subscription, and then the funder also, or how?
So this actually works for brokers and funders and lenders.
Okay.
So anyone can be both a sender and recipient on the network, as long as both parties opt into the transaction. So brokers can run their data through Ocrolus and then be able to permission a cash flow profile to a funder. But funders, especially funders who have a direct marketing channel, who generate their own leads, might decide that they don't want to or can't fund a particular deal, but it might be a deal for one of their downstream funder partners, and they could also use Encore to permission that lead to someone else, to another funder.
Okay, right, yeah, because they're in that capacity, essentially operating their own sales team or broker within their company, generating their own leads, of course, in that example. So then the network is the certain funders that have signed up, or you guys have allowed a certain amount of people to sign up so far. So that a broker would have to be signed up on your network first, correct?
That's right. And so to begin with, we've signed up about 20 brokers and funders so far, mostly funders, and I'd say the small number of the most sophisticated, largest, most tech-forward brokers like Lendio, who was mentioned in our press release. I think really at the beginning of the year, we'll open it up to a bigger group. We're focused on really doing business with the launch cohort right now, and the way we're going to prioritize the next wave, and since our announcement, it's been great. We've received incredible feedback. We have a very large queue of participants on the broker and funder side who are really interested in being a part of this. What we'll really do is ask our funder clients, where do you get your volume? Who are the brokers and marketplaces that you want to work with? Who are your most trusted partners where you're happy with the business you're doing with them today, but you would benefit from more consistent data, from efficiency, from cost savings, and most importantly, a reduced time to offer. And in this market, speed is really important. For a small business owner is, people talk about recessions and bull markets and all these things. When you're a small business owner, what I think most people don't realize is business owners generally are always operating close to the margin. They are constantly balancing their cash flows, their inflows and their outflows. They're always strapped for time, for resources, and they don't have a lot of time to wait around on funders to get back to them with a decision. So there's a very big difference between being able to decide in minutes or hours versus deciding in days. And so what a lot of this product product does is help shorten the time to decision, which ultimately is going to get more capital into the hands of businesses who need it in a faster way.
It's always beneficial, and I think that's the end thing for most to keep in mind in the industry, brokers, funders, whoever, is that we're trying to help out the business owners get capital when they need it. On your website, in the kind of product introduction on your website, it has a little kind of slideshow automation, but whatever you want to call this. Is that something that we should point people to, or is there something else that you want to direct people to if they want to inquire about the product?
Anyone can come onto our website and see a little bit of high-level information on Encore, but also on the system that surrounds it, on our cash flow analytics, our decisioning tools, our fraud detection tools, the way we do processing, the way we do standardized data. And certainly anyone who wants to learn more can either get in touch on all forms of social media, we're everywhere, but also definitely fill out the form on our website. The simple form will give you a demo, we'll talk to you about the product. We always want to work with anyone who's in this market and wanting to get on board.
And one more question on that. Broker has their CRM or whatever software that they're using. It's either an API or something that they have to set up to plug into your network?
Yes, so our product is accessible via API or through a really nice visually compelling dashboard. Someone can literally use the dashboard today and sign up and start dragging data into our dashboard, viewing the analytics, permissioning it through Encore. That's very straightforward. Clearly, anyone who's doing a lot more volume wants to integrate with the API, but the API is a very simple integration. At the highest level, the way Ocrolus works is you give us documents or data, we give you back data, and so it's a give and a get, and the API is pretty straightforward and well documented. And with Encore, particularly if someone is using us already, it's just another very small set of API calls to tell us who to permission that cash flow profile to.
And that's, with the cash flow analytics part, it's kind of a good segue into our next topic. You guys, in partner with On Deck, release a quarterly report that is based on surveys from 531 small businesses and cash flow data that you guys aggregate over time. And I actually did a video about this. I usually write about this. I did a video yesterday, so that'll be out probably before this video comes out, just to those watching. But I wanted to give you an opportunity to just kind of touch on that a little bit about what it really kind of helps anyone in the industry understand, and some things you already talked about with when you mentioned as far as small business owners and their cash and how they manage their cash. I think one of the stats in this report was they have about a month worth of cash, which was maybe a little bit higher at this point in time. But talk to us a little bit about the report and some of the hot buttons on there.
On Deck has been a partner of ours for a long time, and we started doing this quarterly report, I think about a year and a half ago, and it's always a really interesting study. So first we do a survey of small business owners, as you pointed out, I think 531 small businesses this past quarter, and then we look at data we have from Ocrolus, and we basically are looking at a 15-month rolling period of aggregate cash flow profiles. And from that, we get a very good sense of what is the financial condition and liquidity of small businesses at the time that they're applying for credit. And then we can striate it by industry, by geography, by a bunch of other things to understand trends that are happening in the market. And there's a couple things which always are interesting in the survey, and then other things which change quarter to quarter. Number one, I'd say optimism. If you look at stories in financial market, different people, some people are optimistic, some people are pessimistic. If the average person is on a spectrum from pessimistic to optimistic at any given time, I think a small business owner, probably by necessity, is really on a spectrum from cautiously optimistic to optimistic. You basically can't start or operate a small business unless you are comfortable taking risks, building, dealing with uncertainty. But of course, dealing with uncertainty also means being able to weather periods of cash flow stress. And so, as you pointed out, the median small business doesn't have that much of a liquidity buffer in terms of time and covering their expenses. And they also experience a lot of moments of volatility and quite often a gap between the need to pay expenses and when revenue is going to come in the future. And that's why access to timely and on good terms working capital financing is so important for American small businesses. And as we saw in the survey and in some of this data, those small businesses are increasingly going to non-bank financial services providers to obtain short-term working capital. And a lot of this is because of either not qualifying for bank financing, the perception of not being able to qualify? Were they to apply? And then also the speed to decision, like we talked about earlier. And a lot of responders in the survey talked about, one of their biggest reasons for not going to a bank first and going to a non-bank finance provider like On Deck or many of our other clients is just the need for a fast decision, the desire to have a more digital process and forego a lot of the paperwork and manual interaction in a traditional financing process. And certainly my hope is that that kind of working capital credit market innovation that's being pioneered by companies like On Deck and PayPal and Square and Rapid Finance and Expansion Capital and a lot of really great companies in this market, Capitus, Fora, that will sort of disseminate through the market, and other capital providers, even banks, should learn these lessons of how do you obtain high quality information on a borrower, analyze that information in a personalized and nuanced way to understand that borrower's financial health and capacity to service new debt, and then provide a rapid and transparent decision to that business owner so they can either accept your offer and move on. Either way, that's good. The worst thing for a business owner is to keep them waiting.
For sure. And I think it was like 75% was the number, I think, for this report of skipping applying to banks, right? And going to these non-bank lenders and fintechs, which is a very high number now when you think about it, how far it's come over the years. So that's really good stuff. I encourage everyone to check out the full report. I'll put the link down below in this post so people can access that. Go also right to your product for Encore. Anything else you want to share, David, in regards to those two things or anything else?
Yeah, thanks, Shane. It's been a fun conversation. I think you can tell I am very passionate about small business credit, as is the entire team at Ocrolus. I think it is still too difficult for businesses who need capital to obtain the right capital on the right terms at the right time. And it's still too difficult for lenders and funders who provide credit to rapidly make a high quality credit decision about their applicants. And our mission is to solve really both of these two problems through technology, the smart application of AI and advanced analytics, and really help ultimately small business owners obtain the credit that they need to thrive.
Well, you guys are doing great work. It's always good talking to you. People could learn a lot from listening to David, as much as they can. Thanks again, and I'll talk to you soon, and good luck.
All right. Thank you, Shane.
All right, David. Thanks.